Not having a good time right now, are you? A lot of people think. How wealthy investors use these markets. Let's investigate. The Nasdaq is down almost 34% from its peak, and the stock market is experiencing a difficult winter. This is due to the Fed's declaration that it can now modify the tightening pace rather than consistently raising rates. The reason for this is the PCE pricing index. The PCE increased 5.5% in November compared to the same month last year, which is the highest growth since October. As a result, the Fed is tightening monetary policy too much rather than slowing it down. Since the economy is predicted to improve and earnings will be poor, it is not surprising that stock prices have not really recovered. The New York Fed has revealed statistics that indicates the likelihood of a recession. When the COVID-19 in 2020 occurs, the current value will be at its maximum. A recession in the economy is inevitable. We can also infer from this data that a recession is imminent. The Conference Board has designated this as a leading indicator. A recession will typically start within 6 to 7 months if it is negative for 2 consecutive months. Currently, it has been negative for 2 months running, pointing to a decline in the economy. In actuality, investors are dumping the stock market. ETF money are leaving, but the red circle indicates that many people are also doing so. These numbers illustrate the size of interest rate increases as well as the interest rate history from the 1970s to the present. The horizontal represents the duration of rise, and the vertical represents the base rate. It is registering the highest rate of increase in the quickest time frame, excluding the 1970s and 1980s. Since the 1970s and 1980s, it hasn't happened before. I'll explain why we should keep buying equities despite these problems. In 1899, U.S. equities made up 15% of the global stock market. By 2022, they would make up 56%. This percentage is probably going to rise over time. This is due to the fact that the U.S. is home to numerous businesses with monopolistic technologies and goods. Time will finally be forced to claim our assets. Even Warren Buffett earned the majority of his fortune recently. The bear market that will come after this one will only be very slight. Nobody contests the rising trend in the U.S. market. Many organizations are purchasing large American technology companies. The richest people in the world, J.P. Morgan, Bank of America, and others all own substantial equity. As they are aware that the stock will eventually increase. They put their time into it, and they got a return. They all share the trait of not being impatient. We must develop our investing skills. This video's goal is to safeguard your mentality. Also, good luck today. Enjoy your day. We appreciate you taking the time to watch the J&J Stock Story video.